How do we manage our financials? Good bookkeeping. In the financial department, the bookkeeping is the first step in the accounting and financial department, and it is very important activity. The bookkeeping is the recording of daily transactions. Recording of daily transactions, we mean by this recording is the good recording and the efficient recording of the transaction on a daily basis. We cannot leave our transactions to end of periods or to the end of the month or after 3 months to record our transactions in the accounting system and to get an efficient and a good idea. So we have to record every transaction in our books in a daily basis in order to have a good database and to retrieve a good report from this database. So in order to have a good database in our financial department, first of all, we have to record or to mention every transaction on a daily basis and not to leave our transactions for the end of the period and to rush to record it fastly, and this will make mistakes, and then we will have a bad database that will not lead us a good financial statement. So the bookkeeping or the recording of the data is the first and important step in the financial department to have a good database, and this is an asset in the company, the good database. After we have this database recorded and on daily basis, we have at the end of the period to reconcile and to close our books every accounting period. And what we mean by accounting period is that according to every company, maybe it is 1 month, maybe it is 3 months, maybe it is 6, or maybe it is the period of the year period of the fiscal period, the fiscal year of the company. So after the daily recording, we reach the end of the period to close our books. What we mean by closing books? Closing books means to reconcile our accounts. Our accounts of the suppliers, accounts of the clients, our accounts with the banks. All these accounts should be reconciled, should be matched, and should be closed properly in order to have a good financial statement at the end. So, start closing these books, we have to request statements of accounts from our third parties, our suppliers, our clients, or our banks, and to match with our books to reconcile these accounts and to make sure that all the data mentioned in the third party statement is in our books and it is reconciled well. So after that, we will have a closed period reconciled and making sure that all the data are mentioned in our books properly and correctly. And by returning to the recording data or the data entry, we have to mention all the transactions properly and correctly. So we have to make sure that the transactions are mentioned in the correct account and in the correct name. For example, we cannot mention the expense of the administration in the operation expense. Every expense should be mentioned in its proper account. This is the good and the proper recording of the data or the data entry. So we can reconcile every account properly and make sure that all the accounts are closed. Also, we have in the closing period or the closing at the end of the period, we have to match and to see the budget. All the companies works with the budget. So we have to see if we are stick to our budget or not, or if there is a variance in the budget at the end of the period, and so we can see if we are controlling our budget correctly or not. At the end of the period and after we reconcile all the accounts of the period, we start to prepare for the financial statements. So in this section, and after we first record and mention all our transactions correctly in our books, and after closing our books properly at the end of the period, we start working to prepare our financial statements according to the data that we have in our books, the database that we have, and we make sure that we have it correct and reconciled, and it's free of mistakes. Start preparing the financial statements. We have two important financial statements that should be prepared for every period, and these statements will indicate us for the position and for the operation of the company for the subject period. The statement of balance sheet, and we can name it also the statement of the financial position of the company at the end of the period. And let us note that the balance sheet will set at the end of the period. The balance sheet will show us our position, the company's position at the end of this period. What do we have? Our assets, our liabilities. What do we have in our assets, and what do the others owe us? And on the other hand, we have in the financial position or the balance sheet what we owe the others, or what is our liabilities to the others, and we see if our assets more than our liabilities, or we are in a good situation, or vice versa, if our liabilities is more than our assets. The second statement that is important to prepare at the end of the financial period is the statement of profit and loss, the P&L, or the income statement. This statement shows us the result of our operations during the period, and the income statement prepared for a period starting from 2. So the income statement will be prepared for a certain period from 2, and the balance sheet will be prepared for at the end of the period. So the income statement will show us the result of our operations in this period. Do we make profits or do we make loss in this period?